Nigeria is on the brink of a historic shift. The new Tax Act 2025 aims to rewrite who pays taxes and how much. But in a nation where millions survive in the informal economy, where inflation is crushing daily life, does this reform empower or punish? Today, we peel back the law to show you what's coming, and why countless Nigerians are bracing for impact. From January 1, 2026, Nigeria's tax system evolves. The new law introduces sweeping reforms. More people and businesses will be brought into the official tax net. Personal incomes, businesses of all sizes, freelancers, even digital creators, all will feel its effects. The goal: raise government revenue and curb evasion. But in practice, the stakes could be higher than many expect. If you earn below 800,000 naira a year, you're tax exempt. That was designed to shield the lowest earners. But once you cross that line, the rates escalate from 15%, 18%, 21%, 23%, up to 25% for the highest levels. Your income will be sliced into different brackets, each taxed separately after reliefs and deductions. Consider someone making 1.2 million naira annually. The first 800,000 naira goes tax-free, while 400,000 naira is taxed at 15%, resulting in 60,000 naira per year. On paper, that's just 5%. But in practice, every naira counts when budgets are tight. At higher levels, say 6 million naira or 60 million naira, tax burdens rise. Large earnings will attract heavy rates. And now, nearly all sources of income, salary, business profits, investments, rent, digital ventures, company perks, are taxable. Even rent-free housing or company cars carry a tax value. Small companies with revenue up to 100 million naira and assets under 250 million naira will pay 0% corporate tax, a relief to many SMEs, but professional services are excluded. Bigger firms will continue at 30% on profit unless special rates are granted. Additionally, all businesses must still collect VAT, withhold taxes, and use electronic invoicing. The informal sector, the true backbone of Nigeria's economy, faces the most disruption. Market traders, artisans, gig workers now fall into a system called presumptive taxation. No formal books? Authorities may estimate income based on your trade or visible indicators. Even someone earning well below 800,000 naira may be pressured into paying tax if local agents lack clarity. What complicates matters further is that banks will report any account with annual transactions exceeding 25 million naira. Those transactions include every deposit and withdrawal, not just profits. And from 2026, no one can open or maintain a bank account without a tax identification number, TN. Effectively, the system forces many informal earners to register. In the digital age, creators, influencers, programmers, and NFT traders now also count. Every payment from brand deals, ad revenue, foreign clients, that income is taxable. If you make 2 million naira yearly, you must deduct legitimate expenses before tax. Without records, the government could treat your full income as profit. Keeping receipts, separating business accounts from personal accounts becomes essential for survival. The new law doesn't allow the government to seize money from accounts without due process, but it empowers tax authorities to freeze accounts or recover unpaid taxes through court orders. With mandatory TINs and bank reporting, financial activity becomes linked to your tax profile. If your tax returns don't match the money flowing through your accounts, expect scrutiny. You must prove what qualifies as income versus capital. Transfers of savings or loans aren't taxable unless they're forgiven. Without documentation, you may be taxed on all inflows, so maintaining records, receipts, invoices is no longer optional. It's your lifeline. The timing could not be worse. Nigeria is already suffering, inflation over 30%, fuel costs surging, electricity tariffs rising, and more than half the population living in poverty. The 800,000 naira exemption sounds generous, but in real terms, 66,000 naira per month won't cover rent, food, or transportation in many cities. For many mid-income Nigerians, teachers, junior staff, and small business owners, the reform could feel like a tax on their survival. Add multiple layers of taxes: income tax, VAT, bank fees, local levies, proposed excises, and suddenly, virtually everything you earn, spend, or move is taxed. Worse still, Nigeria's public trust in taxation is low. Many doubt that what's collected will be used to build roads, schools, or hospitals. If the additional burden doesn't bring visible improvements, backlash is imminent. The 2025 tax law offers clarity and structure on paper, but its success hinges on execution, transparency, and trust. This is a defining moment for Nigeria. The 2025 tax reform aims to transform how we pay taxes, but for many Nigerians, especially in the informal economy, it feels like a new wave of control. Whether this law becomes a tool for justice or a burden depends on how it's implemented. Will the government be fair? Will they protect the vulnerable? Will Nigerians be heard? Or will history record this as another trick dressed as reform? In the next video, we will explain how this tax reform impacts Nigerians in the diaspora. Like, share, subscribe to Africa Shine Your Eye. Together we'll watch, ask tough questions, and demand accountability. The eyes of Africa are watching. The time is now. See you in the next video.